Over the past 5 years, China's export landscape has gone through dramatic shifts. Starting from 2020, the combination of the global pandemic, energy crises, supply chain disruptions, and changing international policies forced Chinese exporters to adjust not only what they produce, but also where to sell. One of the most noticeable trends is the rise of high-tech manufacturing and electronics exports, while low-end labor-intensive products have gradually declined in proportion. At the same time, China's reliance on traditional Western markets has started to diversify, with emerging Asian, African, and Southeast Asian markets becoming increasingly important. The numbers tell the story clearly. In 2020, China's total exports were around $2.6 trillion. By 2021, as the world adjusted to pandemic conditions, exports surged to roughly $3.4 trillion, peaking around $3.6 trillion in 2022. From 2023 through 2025, export growth slowed, but the structure improved significantly. High-tech goods and high-value-added industries, including electronics, photovoltaics, renewable energy equipment, and advanced machinery, led the growth. By 2025, high-tech exports accounted for more than 45% of total exports, showing that China is not only expanding globally, but also moving up the value chain. For ordinary people, these changes have tangible effects. Employment in export-related sectors, especially in coastal and port cities, is closely tied to global demand. Jobs in manufacturing and technical roles increase steadily, while wages and career prospects for skilled workers improve. The growth of green and new energy industries has also indirectly benefited consumers by reducing reliance on imported technologies and supporting domestic innovation. People living in regions dependent on export industries may notice that shifts in global demand can impact stability and even prices for everyday goods. For companies, the last 5 years have been both a challenge and an opportunity. Large manufacturers in high-tech and export sectors have seen profit margins improve, while facing rising costs for raw materials and international shipping. And small-sized suppliers have benefited from increased demand for steel, machinery, and automation equipment. Export policies, including tax incentives and trade facilitation measures, have supported companies' R&D and encouraged faster adoption of new technologies. This combination of structural adjustment and policy support has allowed Chinese companies to stay competitive globally despite volatility. Investors face what many describe as a decade-long structural supercycle. Between 2020 and 2025, high-tech export renewable energy equipment producers, and specialized machinery companies have offered strong returns. However, traditional low-end exporters and firms relying on single markets faced higher risk. Factors such as raw material price volatility, energy costs, and changing global trade rules mean investors must be more strategic, diversify their portfolios, and close Lai monitored both domestic and international trends. Understanding China's export structure, global economic logic, and policy support is essential for navigating these changes. Strategically, China's export transformation is also a reflection of national planning. The country's focus on high-tech and green manufacturing aligns with global energy transitions and supply chain reconfiguration. Policies supporting high-tech and renewable exports as WBEL as incentives for currency and cross-border payment facilitation have strengthened China's global trade position. The expansion into emerging markets such as Southeast Asia, India, and Africa further demonstrates how Chinese exporters are reducing dependence on traditional Western markets while capturing new opportunities. From a macroeconomic perspective, the interplay between China's exports, global inflation, energy supply shocks, and demand and disruptions has reshaped the investment environment. Traditional safe haven assets, once considered reliable during uncertainty, have sometimes led to provide expected protection. Ordinary people need to adapt by diversifying their investments, considering sectors linked to high-tech, renewable energy and green manufacturing, and being cautious with assets tied to traditional low-end export industries. Knowledge of global trade trends and China's export priorities is now a critical tool for personal financial protection. Overall, between 2020 and 2025, China's exports underwent a transformation from quantity to quality and from low-end to high-end manufacturing. And the global economic logic shift, coupled with many countries' economic slowdowns and the failure of traditional safe haven assets, has forced ordinary people, companies, and investors alike to rethink how they manage risk and seize opportunities. Understanding industrial upgrading, diversification of export markets, policy direction, and the interconnection with global demand is now more important than ever. China's exports not only drive domestic growth but also influence global supply chains and the redistribution of wealth and economic power. By paying attention to these trends, ordinary people can protect wealth, businesses can optimize strategies, and investors can position themselves for opportunities in the new global order. Achieving both economic and strategic advantages, green ships and new energy vessels are also a key focus. Aligning with global carbon neutrality NDS and sustainable development goals, this positions Chinese shipbuilders not only as market leaders but also as standard setters in emerging technologies in container shipping. China's rapid expansion shifts the global supply chain increasingly toward Chinese shipyards, while offshore engineering vessel exports reflect confidence in deep-sea oil and gas development technologies. The military-civil fusion strategy further extends capabilities, naval and defense shipbuilding, creating high-value innovation along the entire industrial chain for investors. This period represents a decade-long structural supercycle with massive market scale, high technology barriers, and strong policy support. Ordinary investors can focus on upstream carriers, shipyards, supporting equipment, and green shipping technologies, but must remain aware of cyclical risks, trade tensions, and energy price volatility, which could cause significant fluctuations. The opportunities lie in land shipping, green ships, new energy vessels, and offshore engineering. Exports, while carbon neutrality and energy-saving technologies present additional growth potential, China's rise in shipbuilding is not merely market expansion. It is a systematic integration of commercial interest, national strategy, and technological innovation. Understanding this allows investors to navigate this supercycle effectively. It requires looking beyond the stock purchases or export numbers. One must understand industrial layout, technology accumulation, policy direction, and global shipping trend. China's leadership in LNG carriers, container ships, and offshore vessels give it economic advantages as well as influence over international standards and regulations. Arctic shipping routes and the Ice Silk Road further increase strategic value. Investors who can identify trends in green shipping, new energy vessels, and offshore engineering exports while avoiding high risk projects can achieve long-term gains in this quiet global competition. Key core of this supercycle is technological leadership, policy support, and global market demand. Over the next decade, China's shipbuilding industry will continue to expand in green vessels, carbon-neutral ships, LNG transport, RT, and Arctic route development. The key for investors is to track the coordination of the entire industrial chain and strategic layout rather than focusing solely on short-term profits. China's shipbuilding capacity and strategic positioning allow it to take the lead in global shipping, energy transport, and international rulemaking. This is not just a commercial success. It is a reflection of national strategy and an opportunity for ordinary investors to understand industry trends, seize opportunities, and manage risks. This decade-level structural supercycle in China's shipbuilding is an major opportunity and a pivotal point in the reshaping of global shipping and industrial power.